The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, welcome to the world of the New York casino. We've had our report come out. Really wasn't very much excitement. The big ones that I see that's happening, we've dropped over $1,000, a full point in bonds after the move up to the 171 level, which was a 1.27 expansion. We've had, minor moves in some of the other things. We had a nice move in gold, but that was not unexpected. If you remember yesterday, we were looking at a possible three drive to a bottom pattern in the gold market. And, we certainly got to that level. And I believe, and this is what I have to go on, is, just looking at the charts, if we take a look at, what gold has done, this morning after the report has come out, you'll see that we had a very strong rally that went up to, you'll never guess, 61% and 1.27 of previous swings up at that 1333 level. We're now trading around 1326. So I think this is nothing more than a rally. It's very similar to the rally that we had back on the 25th of August. So that's the way it looks like to me right now. If we take a look at the stock indices, the first one we want to look at, of course, is the DAX index. And as you remember, that had a tendency to move to the downside yesterday. And as you'll see here, we did go down to a perfect 78% retracement yesterday. Then we've had the three higher bottoms, as you can see here over the past, this is a 5-minute chart, so over the past few hours. And all we've done so far is to get up to a 61% retracement. That doesn't mean we can't go higher. All I'm doing is to show you that this is what's happening after the report. Folks, I want to show you just an idea of what's happening in stocks and give you, how all this stuff came about with this financial channels and all this stuff. Hold on here a second. The first one I'm going to put up here is the chart from the Gallup poll. It's from the Oxford Insight Group, but it shows that the number of U.S. Adults invested in the stock market. And as you can see, since 2008, we've had about a 25% reduction from around 65% down to 52%. And I would like to give you further proof of that is if we would take a look at the UBS, the United Bank of Switzerland, is their trading office in Stamford, Connecticut, which was built by one of my students, was the architect behind this, and I'll put this up. I've been to this place a couple of times, and we'll take a look at it where it was. Here you'll see this in 2008, what it looks like, and you'll never guess what it looks like now. They did some what we call reverse expansion. And we'll put this up to let you take a look at it. What I'm doing is I'm trying to show you that there's just not a lot of what we call participation. It's not a bullish enthusiasm of any things we've seen before. Now, that's not true in the bond market and other places, but this is what I'm looking at. You can see that there's been a big correction in some of these things. Now, let me walk you through how this financial stuff all started. In the 1960s, in Los Angeles, there was a man named Glenn, and I can't remember Glenn's last name to save my soul, but he had a very famous girlfriend, and her name was Sue Herrera. And Glenn went to Merrill Lynch, who was the big daddy rabbit in the West Coast for financial stuff at that time, and he presented them to bring out a channel, a TV channel called Financial News Network, FNN. And it started, and I believe it was in the 60s sometime is when it started, but later on, Ron and Sana came in. Bill Griffith was the first person to come on board. There were some other really great people. They had Ed Hart, and Gene Morgan had charting the market at 1 o'clock, but this was very, very big. But then the recession of 1982 happened, and from 1982, even when the market topped in 1987, it was still doing okay, but was barely making ends meet because they couldn't get advertisers. and that's how they pay for the space. Well, that kept going on and on until around the mid-90s, around 92, 93, it really started to fold off. You're right, Tucker. Bill Griffin is a top class act. Let me tell you, he's as is Ron Insana. Ron was just a graduate student at University of Southern California when I met him back in, oh dear, I think it was 83 or 84. But anyway, what happened was they went into bankruptcy is what happened, and Glenn and Sue Herrera split up, and Sue Herrera went to New York just with a suitcase and a hat in hand, and she went to NBC to present the CNBC format for the world. In other words, it had failed in Los Angeles, but she had sold them on, yes, this has got a really good chance. Of course, they had CNN News, which was already doing well, and so that was the birth of CNBC. And believe me, when CNBC started, you could have advertised for almost anything. I mean, you could have, I think for $1,500 you got a 1-minute spot. Now it's probably $200,000. I don't know what it is, but it's got to be really high. And anyway, she's made it to what it is today. So this is why we get this. Now, how does all this relate to these reports? Folks, the only way they can get viewers to listen to this is if they can give them information that they think they need for their trading. Back in the 70s, it was the money supply. They looked at money supply every Friday at 1 o'clock. The money supply would come out, and bada bing, bada boom. Then you're looking at something that's going to be really crazy, and it was. And the problem was, after a while, that got old, and so they had to bring out other things. So they had the unemployment report. That was during the the recession of the 1980s when we were that was in the 90s now, but we were looking at all of these money supply reports. It was in the 70s. In the 90s, we were looking at unemployment because we had people that were having trouble with jobs, and then we had the recession in 2008. But they need to have these exciting things to happen so that people will be watching. We don't always get a hurricane, so that's why you see all this stuff. And believe me, these reports they are corrected the previous week, so it's really not a big deal. So just keep in mind that these things do occur and they don't last very long. That's the main thing to keep in mind, that this is all structured stuff, and you don't have to worry about it 24 hours later. It's just up until that point. They build it up so much. They've got their own game clock. I'm surprised they don't have a referee. Yes, Danny, I did. The gold got right up to that area. I just posted it into the room here up at this 113. Wow, let's try it again, Larry. 13 in the 1332 area. 1331 was a number we were looking at. It's nothing more than a downtrend. If we look at the same thing in silver, Danny, you're going to see pretty much the exact same thing in silver. You'll see that it stopped exactly also at a 1.618 expansion. Now, if we start accelerating to the upside after this message.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're going to take a look at a few charts here that really tell you where the money play is in here. You'll notice this is the December bond chart. And what I usually do is when we come into a non-farm payroll, or a jobs number, or a what's the other one? The Fed are doing anything that's a major report. What I'll do is I'll look at the expansions over the next 4 or 5 days to see what the market could expand to, because that's what it usually does. It expands on the upside, contracts on the downside. As you can see here, I was expecting something really big to happen, and it was a pretty big report, which should have been, much more bearish, I would think. Are bullish to the bonds because of only 151. That would reduce the odds of a rate hike, but I think that's all BS anyway. But anyway, you'll notice the market did hit the exact 1.27, which is right where it said expected range of the T-bonds. I was expecting to go higher, but it hit that 1.27 of the range from the 28th. And now we've already come down, and we have taken out the low, or we're nearly taken out the low to the downside now. So this is telling us that, we're looking at higher interest rates, folks. I know the stocks are still rallying up here a little bit, and they probably will in the first hour. We'll see how they end, at the end of the day. But that's really what you're looking at here. You're seeing this bond market under a great deal of pressure, and as we've said all along, over these last few weeks, we've watched the Dow Jones Utilities turnover and has been breaking to the downside. And with interest rates breaking again today, we're most probably going to see another move to the downside. And if you can see this Dow Jones Utilities chart that I'm going to post in here right now, you'll see that it is already breaking down below the 61% retracement of last week. And that was after we had a 3-day rally that stopped exactly at the 382 retracement, and that sets us up for another, 4 or 5% move to the downside. So interest rates appear that they want to go higher regardless of what the Federal Reserve. They should just get in and do it and get it over with. I don't think it makes any difference. It really doesn't, in my opinion. So, that's the main thing. I've had several questions about the wheat market. And folks, I'm just going to do what I see. They didn't stop for the solar eclipse. They didn't stop for the new moon. So the only thing you can do if you're in the wheat market is to just wait and see if a pattern forms. And all I'm looking at here is a potential, and that I emphasize the word potential here, of a potential 3-drive pattern that could come in around the 383 level in the wheat. That would be down about 10, 12 cents from where we are right now. But then you would have a good place to place a stop. You would place your stop right beyond the 1.618 expansion, and that would be around the 378 level. So your risk on this would only be, probably about 6 cents. This is no different than the pattern that we saw in gold yesterday. That's just a 3-drive pattern with nice symmetry. And but you just have to wait for that. Patience is actually a position. Having no position is one of your best positions, because you're not forcing yourself to be in a trade. And I heard John Logan mention about the casino in New York, and but it's not a casino. This is intelligent risk speculation. The only relationship that we have with gambling is that we keep score with money. Gambling is predicated on an event happening: the toss of the coin, roll of the dice, spin of the wheel, the blow of the whistle, the toss of the ball. Once that happens, you have no control over it. There's a house percentage that allows you to play, but you have to pay for that. We also have a house percentage called our execution cost, but unlike gambling, is we can get out of the event anytime we want, and we can take our money off the table anytime we want, and we can also increase our bet at our own volition. So that's why there's a huge difference between gambling and speculation. Remember the difference between an investor and a speculator, okay? A speculator is an investor that forgot to use a stop. So you got to protect yourself and focus on the amount that you have at risk. You're going to lose a lot, but you're going to win a lot. And your whole focus here is to win more than you lose, and that's the real thing to watch. Now let's get over to the money markets, because that's where the real money is, away from the bonds, which is number 2 in the list, I would think. But here's where we stood as we came in yesterday. We talked about this. The dollar index, which had 5 major ratios at the same price up in this area, has also had a 61% retracement coming in here on Wednesday. And as you can see, we had the sell-off on Thursday. We got down to around 95.10, 95.20 so far today. That's all that is. And anytime we get above 96.30, I think we've got a pretty good run here. But remember, we had 5 ratios up here in the dollar index. So this could be an absolute major high. If we get the euro above 113.30, this is going to assume that this dollar is getting ready to go lower. That would mean an increase in gold and also some other commodities. But as long as the dollar remains strong, it's very difficult for these commodities to go higher. If we'll just take a quick look here, because I wanted to show you what happened with cattle. We had a huge 5-cent rally in one day in cattle, and look what happened. The market had a rally from 103 all the way up to 108, 5 points. And what did it do? It breaks down, and now it's headed down to that 102 level. And that just tells you you've got a downtrend, you've got lower tops, lower bottoms. And so this is what we're looking at in cattle, is to come down to this level of 102 to 107. So, I wanted to make an announcement. The folks at the Denver Trading Group are going to have Norm Winsky on September the 7th for a 1-hour presentation. And if you want to listen to Norm for a whole hour, go to the Denver Trading Group, and you'll be able to listen to Norm for his hour. And I think you'll enjoy that. And we will have Norm as a guest on September the 7th. I've declared a holiday for Monday, folks. You don't have to do any work at all. Take the day off. This is known as Labor Day. Of course, when you do what we do, it's not labor, it's a labor of love. And Confucius said, the man who loves what he works is on vacation all the time. All right, let's take a quick look at the other markets that we're keeping an eye on here. This is one that we're watching for a better shorting opportunity here, and this is the British pound. I would like to see the British pound, get up into this area of 135. We're trading at 133 and change now. And if we can get this up here, I don't think this will happen today, but next week is one of the things that we want to focus on, is to watch this British pound, coming up to that level, because it should be a pretty good spot, to take a look at it. And we'll also be watching the Japanese yen for next week, and that will be another one that looks, really interesting. The questions asked about the gold. We need gold to get above 1337. And that would tell us that maybe this bottom is in, and maybe it's not even going to hit the 1275 per ounce level. I still think that's in play, but we need gold to get above 1337 for that to happen, because all we've had so far is a rally back in a bear market. Gee.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've been asked to take a look at the E-mini S&P. As you can see, I've posted the chart in here. The area of resistance that we want to be looking at is 2182 to where we are right now, 2178. Those are the areas where, we have happy hour, the first half hour of the day. So wait till, the crazies get done with their work and then, move on, to something else. But I wouldn't do anything until the first half hour. We are up against some pretty good resistance, but, these markets have a tendency to accelerate at times, and you don't want to stand in front of one of those acceleration periods that you do run into as we go through. Now, I am waiting for one particular market to open today. We had something really dramatic happen yesterday. It doesn't happen very often, but in the junk bond market, I'm going to put this up here and show that you're looking right at the a big gap down. Now, if we gap down again today, and with bonds down now after trying to rally, there's a possibility that we could gap down. I've got my limit on to let me know if we get below that 86 and change level, because then we would have two gaps down, and that would tell us that we're looking at higher yields. If you look at this blue line that's on this high grade chart, high grade is the junk bonds, high yielding bonds. But if you'll look at the blue line, which is the line chart, that is the chart of the 10-year notes, and you can see that's been in a downtrend, since July, which means we are starting to see higher interest rates. Now, the market is not giving us that because, what the Fed is doing, with their manipulating of interest rates, which that is their job. But the actual market itself is telling a different story. So money's starting to move a little bit. So we want to pay attention to that because we believe that that's one of the things that we're looking at. And when we look at the Dow Jones utilities, we're seeing the same type of a thing happening. And that's the real key, to be watching as we look at some of these areas right here. But remember that the Federal Reserve is a very large player in some of these commodity markets, and they can move these markets for extended periods of time, so you don't want to stand in front of it. But if you're going to look in this area of 2178 to 2182, above 2186, you got to yell uncle, because maybe this thing will go even higher. We're seeing a big divergence, of course, between the Dow Jones industrials and also the S&P 500 and the Nasdaq. The Nasdaq and the Dow Jones are much weaker than the S&P 500 right now. But those are, don't forget, it's a market of stocks, and there's not that many stocks that are doing all this, folks. You're talking about 130 stocks that are making this stuff move. And, there's thousands of stocks out there. So you've got to let the New York Stock Exchange Index be your guide. That would have to be up over 200 points in the Dow today to show that we were making it. I think we're up well over 100 now in the Dow. I don't have the exact figure, but we should be at least that. And then we'll see. That's it. Now, 10:30 is also when the Federal Reserve, brings in their Fed juice that we get from good friend Shane Smolian. So watch that time also, because if you don't see an inflection here in prices to the upside around 10:30, that's telling you that the Fed is not pumping money, into the system like they usually do. So, just keep an eye on that, and we'll watch how it unfolds. The high-grade bonds have not opened as of yet, and I'm actually waiting to see what that chart looks like when it does open, because if it does, wow, they open sharply higher. Boy, this is sick. I don't know how they figure this one out. And let me repost this, because this is absolutely unbelievable. We gap down, and then today we gap up with bonds being down. Boy, they got to be playing games with this thing. Hold on one second, and we'll take a quick look at it again. I was expecting this to, but they don't always do what I expect, so that's always a good thing to look at. Let's just take a look here at this high yield bond market, if I can get it here. There it is right here. Hold on. Okay, you're going to see it, and we opened higher in the high yield bonds instead of lower. That doesn't make any sense to me at all either, but this is not always a game of making sense. But you can see the notes are going lower and the high grade bonds are going higher. People are paying up for junk to get a higher yield. That's not good. Bernard Baruch said Don't be concerned on the return on your money. Be concerned on the return of your money. And that's the main thing. We've had a request to take a look at the soybean market. We did get up to around 950 yesterday in beans, but I'm still looking at a potential here in November beans to get down to maybe the 923 level, down about another 25 or 30 cents. We're certainly in a pretty strong downtrend. As you can see, we completed a big ABCD pattern back here on August the 23rd, up around that 1020 level. We were there for 3 or 4 days, and then now we're heading down about $1 a bushel lower, which is quite an amount in dollar terms. So we'll see. We have a question about Rich Anderson of Anderson Capital Management. We were looking for a potential reversal in that 105 level. We did rally, went from 104, to 108, and then it went down to new lows. All we're looking at now is the fact that we've got another bottom down here, potentially at this 102 level. I wouldn't touch it until the holiday's over, because you got the holiday buying, and if there's good buying coming in, that could be the extent of the down move in cattle. But if there's not a lot of demand, cattle could easily drop down to the 98 or even 95 level. So I would wait on the cattle. I don't see anything to do in the cattle market, at that time. So those are the things that from the cattle market. Same thing with corn and wheat. I think we have to wait for a pattern to form. When we have that, then you have a better idea of what's going on in the market. So keep in mind that's something that I think is relatively important. One other market that someone asked me about, and that is the TBT, which is the ETF for the Treasury bonds. I'm going to put that in here. The problem with these darn ETFs is they don't always follow along with what the bonds are doing. I mean, they do on a longer term basis, but over a period of 2 or 3 weeks, these things can go sideways, and you're going to get, discrepancies in what you think you're looking at, because a TBT is an ETF based on these notes and bonds, and how they make these things up would be a little bit more easier to understand. But I don't understand ETFs. I think it's one of those things that Warren Buffett talked about, the weapons of mass destruction, but we'll wait and see. I've also had a request about the Volatility Index. I still think that's the way to be. I believe that Volatility Index is going to be trading up in the 25s and 30s very, very shortly, and I think that's a good spot to look at it. And the best way to do that, of course, is to look at like a November call. You have to pay probably about $4 for it today, but and risk half that as your risk. But that's what I see from the cheap seats here in Tucson, Arizona. So we want to watch that very, very closely. Now, take a little break here. Wow, don't know what else to do.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I've posted the 30-minute charts of the Nasdaq and also the Dow E-mini to show you that they're lagging the S&P. The S&P is the one which is the strongest. But remember, folks, if we had a breakout to the upside today, I think this would be an absolute false breakout. The reason why is, if you'll remember what happened to the SpaceX shuttle that happened here, booster yesterday or whatever, it blew up right during what do we have going on in the market now? We have Mercury going retrograde. Mercury is a very important planet, folks. Albert Einstein spent his career looking at Mercury. That's how he proved his theory of relativity of bending space and time. So it must mean something. Isaac Newton studied it. Da Vinci studied it. Pythagoras studied it. All these smart dudes studied Mercury. So when Mercury's in retrograde motion, because it's the planet of communication, it is very, very influential in doing things that make things usually go wrong. If you'll remember the car, what was the name of it? The Edsel. Edsel Ford's car was the brainchild of Robert McNamara. Was also brought out during a Mercury retrograde person. But when Mercury went direct, who came out with it? Lee Iacocca came out with a 1964 Mustang, one of the most popular cars ever introduced. I still think it holds the record. But anyway, that's neither here nor there. So that was very interesting. Okay, at least to me it was, because it brings back memories. I had a chance in 1964. I'd been out of school for just a little bit, and I had a couple bucks in my pocket from corn trade, and I ended up buying a Porsche instead of a Mustang, and it was really, really great little car, but that's just history. You don't need to hear that. Okay, let's go back in. We'll talk a little bit about the markets, what we're doing right now. We're seeing a pretty good run in the markets. I don't know how much the Dow is up because I don't have it in my handle. I believe it's up well over 100 as I can see. Gold is only backed off about $7 or $8 from the high. Silver also. The key markets to watch, folks, are to watch the euro, because if the euro breaks down and we start making new lows below 111.60, that tells us that this thing is all bogus and the numbers that they gave us are not what's really happening. So that's the key to keep from from my perspective, looking at these things. Gold above 1337 would also tell us that, this thing is probably changed direction, but I don't believe that is going to be the case. So we'll watch this very, very closely, as we can see. So we're up at the top end of this range now in the E-mini S&P. We're approaching the 786 retracements, of course, in the Dow Jones and also in the Nasdaq. So watch these levels very quickly. See, all you're doing now is you're just taking the highs out of the last 4 or 5 days. That's exactly what we did with the excuse me one second. It's exactly what we did with the Treasury bonds. We went up to 171.10. That took out the high for the last few days, and that's it. The 78% retracement of the S&P is 2182.5. So keep an eye on that. So far, we've been, what, 2080? Oh, we did hit 2082.75. So, yeah, it's already made it. So we'll see if that's going to be the case. All right. Anyway, that's the main thing that we're looking at. Actually, the report was really not much, I don't think. It should have been a lot more crazy. I mean, it didn't. I only had 2 markets that hit the outside ranges of what I was looking at, and one of those was the silver, and, of course, the other one was gold. And, those are the ones that we look at from a long-term perspective. But I believe we're going to get a pullback in these. We'll still be able to buy them, a little bit cheaper as we go down the road. The British pound is still working higher. We're at that 133.40 level. I'd like to see that. I don't think we're going to get to the 134.80 level today. That's still 120 pips higher. But next week we want to watch that one very, very closely, because that's been in a very bear market, and we're having a very long bear market, and we're having our first really distinct ABCD pattern in the British pound. I should bring this up so you folks can to see what we're looking at here. Just give me 1 second here, and I want to bring it up to show you where we are. Oh, don't tell me I lost it again. Oh, someone's asked me to cover the crude oil. I don't really have an interest in crude right now. One of our students sent us a 1-minute chart last night, which is fine if you like to trade 1-minute charts. But you'll notice here with the crude, you had a beautiful 78% retracement and a little 3-drive pattern, and the market rallied well over $1,000 into the report. And so, all that did was complete another, ABCD pattern. You've got to get crude oil above $45 a barrel to get the bulls interested in it again, because, it's had a pretty good run here, and that's really, what you're looking at. And we're not very far away. We're 44.5 right now in the crude oil. So you do have a chance for that to, to get above that level. So that's the main thing. I should show you this, because this is one of those little patterns known as the Gartley. This is a 15-minute chart here on the crude oil, and we'll put this into the den here so that you can take a look at it. The problem is you can't cover all of these things, during a report. It's just absolutely impossible to do it, folks. There is no one that I know of that is capable of actually, seeing all of these things line up so that you're able to do them all at once. And even if you had your order setting in there, chances are, you're not even going to get filled on some of them. So remember that you just can't do them all. So you got to pick. I like gold and silver. I like bonds. I missed the bonds. My order was to sell those a little bit higher. Got a little bit lucky in the gold and silver, but and now I'm looking at these stocks up at this level here. We get through amateur hour, and we're not through 2183. This is going to be a very interesting format to look at it. I've had another question about the grains again, folks. I don't touch the grains here. We got a holiday coming up, so we'll look at them Monday. Or Tuesday, and then we'll see what happens, and probably not even going to buy them until maybe Wednesday or Thursday, when we get some type of a really nice pattern that we can control our risk on. Because the key is to controlling your risk. You don't know, what these things are going to do. So what you've got to do is just sort of protect yourself against, a catastrophic loss, and that's really what you're what your whole game plan should be. That's the way I look at it. But anyway, we have some key levels to look at. There's no question about that today. And the main one, of course, is 21.83. Anything above 21.87, we're going to have probably a new high. But I believe this will just be a marginal new high based on whatever the people are that are interested in buying it at this level. But neither here nor there. You want to wait a little bit just to see what happens, especially with the holiday. And remember, this is the first day of the month, which is second trading day of the month, which are the first, the last two trading days of the month. The first two trading days of the month are the most positive. In addition to that, you have a holiday, which September, the Labor Day holiday is the weakest of all of the positive dates. In other words, a day before a holiday, the market has a better than 70% chance of going up, except for September, which is only 60%. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're almost done with happy hour here, the first half hour of trading. Keep an eye on the market here after the first hour. If we're below 2183 in the S&P and 18,535 in the Dow, then it's most probably a top being put in here today. Remember, we're only 1 day away from the lunar eclipse, the solar eclipse and the new moon. And of course, Mercury turned retrograde, on Monday. So we are in a period of flux, as we say in the trade. The euro, watch it very carefully, because if we go below the lows we made earlier today at that 111.60 area, that would tell us that we're having a reversal day there. We're already having a reversal day in the Treasury bonds. They're down almost 2 full handles, folks. I mean, this is what's so amazing is you watch high-grade bonds, junk bonds, are going higher, which should be the exact opposite of what's happening. But, you don't want to fade what the market's doing, because markets are always right. Men are seldom right. So keep an eye on that. But the fact that the bonds are this weak tells us that rates look like they do want to go higher, and we're seeing further evidence of that with the Dow Jones Utilities, which have broke down, 4 or 5 weeks ago and continued, to go a lot lower. So those are the primary things that we're looking at. And also remember that the day before a holiday, you're probably going to be up. And since we're so far above the opening right now, it's going to be hard for a big reversal today, I would think. But we'll see what happens as we come in here, to Tuesday morning, and we'll look at some of these other things. But mainly the silver and the gold and everything else has done pretty much what we expected for today. The big surprise, of course, is the fact the reversal that we're having in the bonds, and also the fact that we are getting a little bit of movement in stocks. Not very much. We're just rallying back to the 78% retracements, and not even to the 61% retracement in the New York Stock Exchange Index. But here again, it's early in the morning. You got to get that first hour, which is the big volume hour. Have a wonderful holiday, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting